Hello guys, welcome to our Peep Show. We are Monday the 23rd of March 2020. Sylvain Loganadin with you today. Ah non, ça marche pas. Hello guys, welcome to the Peep Show. We are Monday the 23rd of March 2020. Sylvain Loganadin with you today for a new show. So the main focus of today's live will be how long can the stock market crash last? This is the question everyone is asking themselves. And we will try to answer to that question right now. So the first thing that we have to analyze before timing the market is that the crash on the stock market has basically happened 4 weeks ago. So at I will say the beginning of March or mid February, we just had a huge sell-off on the stock market that led right after that to a sell-off in the bond market, to also a sell-off in the commodity market. The real question is how long can this last? Everyone is looking at the coronavirus. Everyone is trying to time the moment where the coronavirus crisis will end. Everyone is looking to analyze if the coronavirus crisis is being to end very soon or not. But the real question is, where should we pay attention? Where should we pay attention? Yes, because the coronavirus crisis is not for me the most important thing to analyze and to look at when you are analyzing the market and when you are trading. The thing that is very important to monitor on a daily basis is oil. The commodity market and the energy market is the one which is definitely giving the trend on the financial markets. The coronavirus crisis will definitely end. Will have great probabilities of ending around, I would say, June or even for September. This is a sanitary crisis that cannot last forever, or at least that will not last forever. But the real action is on the oil market. If you look at the oil market, this is what did put the market in distress. When we lost 30% on the oil market, when we lost 30% on the WTI, this is when definitely the stock market took a huge hit, and when the stock market went down. Okay, this is when the stock market, the banks just feared a lot of default in the energy market sector. As you know, the energy sector is financed by banks and financial institutions. Those institutions just gave huge credit line to those companies, and those companies with an oil at $20 per barrel could not survive on the very long term. Only the strongest one can survive on the very long term. And by the very strong one, I mean the one like the French Total. Okay, so Total basically is a French company that is a group, and that definitely is one of the biggest oil company in the world. You have Exxon, you have BP, etc. But Total is one of them. Total and the CEO of Total just said that they can survive with an oil market that is basically going lower. So $25 per barrel is not a problem for them. They said that they have a break-even point below $25 per barrel. They even say that they will stop the buybacks of their shares. They will also cut their operational expenses by 800 millions of dollars this year, and they will also slow down on capex, so basically capital expenditures for this year. So Total is basically one of the companies that can survive to those kind of distressed events. But the very small companies, all the other ones that people were betting on, will not survive on the very long term if oil stays at this level. You have also to note something, and you have to take into consideration one information that is very important. You have US officials that was invited by the OPEC on the next meeting of the OPEC on June, okay, to discuss maybe cutting the American oil production. That will be a first, okay, in those kind of events. Usually Russia, Saudi Arabia, and the OPEC countries cut their production to drive the oil prices higher. America never really followed those kind of things, and maybe for the first time in June we will see something that is definitely going to be a first. Maybe the US oil producers will agree to cut their productions in order to sustain oil prices going higher. This invite and this project of cutting the US oil production was not seen positively by the US regulators and oil producers. So this is not something that is sure. What we need to know, and what we do know for now, is that if no agreement is found between the OPEC countries, the United States and Russia, oil is going to be lower, is going to go lower, and a lower oil, an oil market that is trading at, for example, for the WTI at $20 per barrel, $15 per barrel, or even $10 per barrel could be a real disaster for the financial markets. That could be a real disaster for financial markets, and just that could trigger also the default of some banks, and that could be the next source of financial crisis. So this is what we have to monitor. How long can the stock market crash last? As long as the oil market is basically in distress. So that's the answer. And for me, it will at least last another 3 months, because the next OPEC meeting is in June. Okay, we are in March, maybe April, so we have to wait two months and a half before having something, before having maybe the hope of a better situation on the oil market, or a confirmation that nothing will get better, and that the oil market will be in distress. So, how long can the stock market crash still last? At least 2 months and a half, until the next OPEC meeting in June. That's all for me, guys. For this part. I wanted to show you something. If you want, for example, to automate a selling strategy on the WTI or on the Dow Jones, because as you see now on the US Dow Jones, we have a pretty clear confirmation that this morning we had a bullish move, because the Fed just said that they will re-inject a lot of capitals, a lot of money into the market. They will basically inject this week $700 billion alone in the bond market, and they will basically buy some mortgage-backed securities from the banks, and also government bank and corporate bonds. So they are giving money to corporations. And they are also buying debt from the financial balance sheet of the banks. And if you are looking to, for example, implement a selling strategy, let's see how to do it in Arya. So very quickly, one of my setup for today was basically this one. So in this kind of markets, I will just try to sell the market whatever the price on the next, I would say, confirmed fractal, and I will just send an entry tap on automatic. I will also have a risk per trade of 0.25%, because I want to be conservative on those type of markets, because those markets are very volatile. I will get and I will put a consecutive loss and consecutive win at one, because I don't want to take a lot of trades. I just want to have one trade. And I will set my stop loss on based on the volatility. That volatility has to be an XXL volatility, because the volatility right now is just huge. All right, and the word is not enough to express everything. I want a risk to reward ratio of 1.5, and I also want a trading mode. That trading mode has to be a combo fractal plus. So basically, I want a break-even stop loss. I want my stop loss to go at break-even when we reach 50% of my target. So I just set here 50%. And then I want my stop loss to follow the trend lower and lower and lower. So that's it. Then I put and I click